So, it finally happened. We just witnessed the biggest, most hyped IPO in human history. SpaceX went public under the ticker SpaceX, looking to raise $75 billion at a mind-melting $1.75 trillion valuation. And for a second, everyday investors were ecstatic. For 24 years, this company was an exclusive club for billionaires and sovereign wealth funds. Suddenly, regular people like you and me could own a piece of the Mars dream. But the honeymoon lasted all of 5 minutes. Right after a massive post-IPO spike where the stock teased $225, reality hit hard. SpaceX stock just tanked more than 16% in a single day, capping off a brutal 3-day losing streak. Now, if you got in early at the IPO price of $135, you're still doing okay. But if you bought into the peak hype, you're already down big. So what's going on here? Is this just a temporary speed bump on the way to the stars, or did hundreds of thousands of retail investors just walk right into a beautifully laid trap? We have to look at what SpaceX actually is right now. It isn't just a rocket company anymore. It's essentially 3 or 4 different businesses wearing a trench coat. On one hand, parts of it are killing it. Starlink brought in over $10 billion in revenue on its own last year. But behind the scenes, the broader company is bleeding an absolute ocean of cash. SpaceX posted a staggering $4.9 billion net loss in 2025, and they've already bled another $4.28 billion in just the first 3 months of this year. Why the massive hole? Meet xAI. Earlier this year, SpaceX quietly absorbed Elon's AI company. Now, an AI-powered space program sounds incredibly cool. Right now, the money you pay for Starlink and the revenue from rocket launches are actively being used to bail out a massive and profitable AI money pit. And it gets weirder. Before this merger even happened, Tesla poured $2 billion into xAI against the explicit votes of its own shareholders. When SpaceX swallowed xAI whole, those Tesla shares automatically converted into SpaceX stock. Elon essentially bypassed corporate democracy to shuffle billions around his empire, and public investors are the ones left holding the bill now. During the IPO, SpaceX did something that made a lot of people think Elon was looking out for the little guy. They reserved a massive 30% of the entire IPO specifically for retail investors. That's triple what a company normally offers the public. It feels like democratization, right? Wrong. It's a complete illusion. SpaceX is using a dual-class share structure. Translation: your shares carry practically zero weight. Elon Musk controls nearly 80% of the voting power while only owning 42% of the actual equity. The legal filings explicitly state that under no circumstance will Elon ever have less than 25% absolute voting control. He can never be outvoted. So why give 30% of the company to regular people if he doesn't need our votes? And major Wall Street institutions could have easily bought up the whole $75 billion block. Because retail investors are insurance. Wall Street insiders know that everyday fans hold on to stocks out of emotional loyalty, even when the ship is taking on water. We saw this exact same playbook with the Saudi Aramco IPO a few years back. The big institutions price the dream at the absolute peak, cash out early, and leave the public holding the bag for years. If you think a 16% drop is bad, the real reality check hasn't even arrived yet. Right now, only 4.9% of SpaceX's total shares are actually trading on the open market. The other 95% belong to corporate insiders and early venture capitalists whose shares are locked up. Those restrictions start lifting around August 8th. When billions of dollars of insider stock suddenly unlock and hit the market, the downward pressure on the stock price could be catastrophic. Look, think of SpaceX right now like a vending machine. The average vending machine makes a few $100 a month. What would you pay to buy it? A few grand? But if Elon Musk spray paints a giant X on the side, tells you it's going to Mars, and prices it at $100 million even though it still makes zero profit, would you buy it? That is the reality of the SpaceX valuation right now. People are paying absurd premiums based on promises made a decade ago, like when Elon promised back in 2016 that we'd have humans on Mars in 6 years. Don't get me wrong, SpaceX is an engineering marvel. What they've done with reusable rockets and Starlink has genuinely changed the world. But an incredible company does not automatically mean a safe stock. Between billions in hidden AI losses, a structure that silences your voting rights, and index funds forcing your retirement savings to prop up the price, this IPO is a masterclass in Wall Street engineering. It's designed to reward the insiders while the public takes all the risk. But I want to hear from you. Did you buy into the SpaceX hype, or are you watching this play out from a safe distance? Let me know in the comments below. If you found this deep dive helpful, do me a huge favor. Hit that like button, subscribe to the channel, and turn on notifications so you don't miss the next breakdown. Appreciate your time today, stay smart with your money, and I'll catch you in the next one.